So nitaanza tu venye iko. So let us we are going to talk about the adjustments of final accounts, adjustments of final accounts. So we are going to talk about the adjustments of final account. So adjustments of final account. So adjustments of final account is what we are doing about today. So watu wamekataa kujoin, but we shall continue with those who are available. We shall not wait for anyone to join. So we shall not wait for anyone to join. So when you join, we shall continue with those who are around. So specifically, we are going to talk about prepayments and accruals. Prepayments and accruals. Prepayments and accruals. We are still under adjustments. Remember, we are still under adjustments. So prepayment and accruals. So let's talk about the rules of adjustments. Rules of adjustments. So rules of adjustments. Rules of adjustments, and we can say that when the question of final account, when the question of final account, so when the question of final account has a trial balance, and additional information, So when the question of final account has, final account has a trial balance and has additional information, item on the trial balance will be treated once, comma, items on trial balance will be treated once. So underline the word once. So the item on the trial balance will be treated once, while the item on additional information will be treated twice. While the items on additional information will be treated twice. That's what you need to know. So, but the item in in the additional information will be treated twice. So when you see a question that requires you to prepare the income statement and also wants you to prepare the balance sheet, then you have been provided with additional information, and at the same time, you have been provided with trial balance. Now, items in trial balance will be treated once, and then the items in the additional information will be treated twice. This is the reason. This is the reason. This is because. This is because. This is because. Items already on the trial balance. Items already on the trial balance. The trial balance has gone through the poetry. Has gone through the double system. The double entry system. While items on additional information has not gone through the double entry system. That is the reason. The double entry system. What does it mean? Now it means that the items in the items in trial balance has already been adjusted. This means that the item already in the trial balance has already been adjusted. So the item already in trial balance has already been adjusted. So the items already in the trial balance has already been adjusted, but the items in additional information has not yet been adjusted. So the items in the additional information has not yet been adjusted. Therefore, when preparing final accounts, when preparing the final accounts, additional information should be adjusted. Additional information should be adjusted. Additional information should be adjusted. Considering the double entry rule. Considering the double entry rule. The double entry rule. What does it mean? I.e., for every debit, there must be a debit. There must be a credit. There must be a credit. So for every debit, there must be a credit. There must be a credit. So therefore, when we are preparing the final account, the additional information should be treated twice. So that you need to know that the additional information should be treated twice. Should be treated twice, meaning that we need to consider the aspect of the double entry. We need to consider the aspect of double entry. Common adjustments. Common adjustments. So now we have we shall start with number one, prepayments, and accruals for both income and for both expenses, and incomes, for both expenses and income. So that's the first one. Number A. Let us start with prepayments, expenses, prepayment expenses, prepayments expenses. So what are the prepayment expense? Now, it's also called payment in advance. Also called the payments in advance. You can also call them also called payments paid in advance. Paid in advance expense. Now this one usually occur where you pay something in excess of what is required. For example, you're supposed to pay for rent a particular amount, but you pay excess. That amount that you have paid in excess is what we call the prepayment expenses. So that amount that will be paid in excess, so we call the prepayment. So we can say this occurs where expenses are overpaid. This occurs when the expense is overpaid. Or paid in advance. So for example, the rent for this month is 400 Kenya shillings. Now, so you're supposed to pay what for this month, for this period, the period that we are, you're supposed to pay a rent of 400, but you end up paying 800. So meaning you have paid more than what is required. Therefore, when we are adjusting this amount, we need to adjust the extra amount that has been paid. That is amount is what we call the repayment. Now let's see how we adjust it. Let us see how we are supposed to adjust that excess amount that you've paid. So we say it uses the accrual concept. So these expenses is adjusted. This expense is adjusted using accrual concept. You know what's accrual? Accrual concept. So we match expense with the revenue for the same period. So we are supposed to match the revenue with expense for the period. So let us see. This concept states that so this concept states that so it is said that expense in the card expense in the card that expense in the card for the period must be matched with the revenue So expense in the card in the period to be matched against the revenue, So should be matched against the revenue and in the period So we use this concept. Now, we shall only record what is earned in the period. For example, if you are supposed to pay a rent of 400, but we pay 800. So remember, you're supposed to pay the rent for the period. What was in the card? So what was in the card for the period is 400. But what was paid, what was received or what was earned is 800. What was paid. Now, between the two, which one should we record in our income statement? Now, we record the exactly amount that we had in the card, the 400. Then the extra, let us assume we paid 700. Let's assume we paid 700. Now, 400 is what we shall record them in the income statement as expense. This one. But the extra, now we have an extra that we have paid, an extra of 300. Now, this extra amount that we have paid in advance, inamaanisha kwetu it's an asset because we can claim it back. We can claim this amount back kwa sababu tumelipa excess. So sisi tuna wao watu wako na deni yetu. Hiyo for example landlord. So sisi landlord tunafaa kumlipa 400 kama rent. Lakini alikumlipa 400 tukamlipa 700. So 400 itakuwa an expense in our income statement for that period. But the extra amount 300 it will not occur in that period. This is supposed to be for the next period. Therefore, we shall carry it in the next period as our current assets. So this is what you need to know. Let me write it down now. Niseme hivi. For prepaid expense, what was paid in advance? What was paid in advance must be deducted. So what was paid in advance must be deducted to the expense incurred during the period. To the expense incurred during the period. This statement is very important. So this statement unaandika even with another pen so that you remember. So for prepaid expense, what was paid in advance must be deducted to the expense incurred during the period. It must be deducted. That one, and write that word, and you make a star. Underline that word. It must be deducted. Now, why are we deducting? Because we have overpaid. Now, NB, another thing you need to know, NB, this one is very important. Now, expense into your balance. Expense into your balance is what is paid. Note that one. Any expense in the trial balance, it is what is paid. You need to know that one. Ukienda tu kwa trial balance umepatiwa some figure as an expense. That is what is paid. But so it's what is not what is paid. Expense in the trial balance is what is incurred. So ukienda tu trial balance ujue any item imepatiwa kwa trial balance, it is what is incurred. While expense in additional information is what is paid. You need to know that one. Where the item in the additional information is what is paid. Now, the amount that is paid is what is in the additional information, and it must be deducted from what was incurred. So can I expense in the additional information wamesema they overpaid by 200. Then kwa your balance nakwambia that the expense for that amount is 800. So lazima deduct 200. So 800 minus 200. Let me show you. I want to show you with an example. Now, treatment. I think ndio kujua sasa. Treatment. Nataka tumalizie haraka. Treatment of this item now. Treatment of accruals. Treatment. So treatment. So overpaid or the prepayment or prepaid expense must be deducted from expense is the trial balance. That's the first treatment. The second treatment, the prepaid amount will be treated as current asset. So that's the two items you need to know. So one will be an expense, the other one will be a current asset. Now it will be a current asset because we have paid in advance. So that amount that we have paid in advance go to the asset because we can claim it back because we have to in advance. Meaning we can claim it back. We can claim it back. You will give an example. Now example. Now we have our trial balance. So we have our trial balance. So we have a trial balance, and in our trial balance, we have electricity, for example, of 800. And now going to be additional information. Additional information akatuambia that electricity was prepaid by 100. Electricity was prepaid by 100. Calculate the correct expense and any other entry to be made. So we calculate the expense, electricity expense, and also any other entry that should be made from that. Now, I want you, without that information, what do you think would be the expense? What do you think would be the expense in the correct expense? Now the correct expense ndio hii hapa. So solution. So solution. So we say now electricity expense will be given as, so the 800 in our trial balance, then you are supposed to do what? To deduct the prepaid amount. So the correct amount is 600. That is our expense. This will be our new expense of electricity to be credited. So it will be debited in P&L. So it will be debited as an expense in P&L. Then you have another item. So any other entry, another entry is that the prepaid amount will be treated as current asset. As prepaid asset. Of Kenya shillings 100. So we have an expense of 600 and we have an asset of 100. This one is the overpayment that we made. Then this 600 is the expense for the period. So it's supposed to be 800 minus 100. No, 700 actually. 700. So that's how you do the adjustment for prepayments. So that's how you do the adjustments for prepayments. I think it was sour. I think that one is okay. Let's go to accrual. So accrual, before we go to income, let's go to accrual expense. Number two, number B. Number B, we talk about the accruals. Other people call them the owings. Other people call them outstanding expense. All this name. In arrears. Other people call them expense due. Expense due. Now, what does it mean? It means we have not paid the full amount. Now, for example, our rent, for example, I say our electricity is 800. Let us assume that our electricity is 600, but we have paid only 700, but we have only paid 700. So we have paid less than what is required. So now, for example, when we talk about this prepayments, our electricity is 800, but we have paid 900. Tumelipa 900. Kwa maana kama tumelipa 900, we have an extra of 100. That 100 is what we call the prepayment. So electricity was prepaid by 100. It was paid by an extra 100. So kumaanisha, what is in the trial balance? It is what it was incurred, but what was paid, it is 900. So kumaanisha, we had paid an extra of 100. Now, that's for prepayment. Tumelipa more. Now, in some situation, inaweza kuwa our electricity bill is 800, basi tumelipa 700. So kumaanisha tuko na deni hatujalipa. So there is a deni somewhere hatujalipa. Now, when we are recording the expense amount, we record what was incurred. I want you to note that one. We record what was incurred. Now, tunasema what was incurred is 800. What was paid is 900. For expense, we record what was incurred in our balance, which is 800. Now, in the other case here, what was incurred is 800. What we have paid is 700. Now, which amount shall we record? We shall record the 800. Hata kama tulipa 700 kwa deni ya 100, we record 800 in our expense. So we are matching we are matching what? So accrual concept, not accrual concept. We want to recognize expense against the revenue for the period. So what was incurred is 800. What was paid is 700. We are going to record what was incurred, the 800 amount, as our expense. Then the extra amount, because of 700, the extra amount which mebakisha shall be treated as current liability. It shall be treated as current liability. Now we shall do an example, but for now, let us write it down and say it occurs when we pay, when we did not pay, what we incurred. So tulikuwa tunataka kulipa stima 600, tukalipa 500. So hatukulipa yenye inatakikana, tulipa less na 100. That 100 is what we call the accrual. So that 100 is what we call the accrual. Now, internal balance, again, I'm repeating. Internal balance is recorded and not what incurred. So internal balance, only the amount paid is recorded. So the amount that is paid is what is recorded in the internal balance. We shall confirm to kama ni kweli. Only the amount only the amount paid is recorded and not what was incurred. Then you can say treatment number one. So we have two treatment. So we have two treatment. Number one, other accruals. to what is in trial balance. Add back, add the accruals to what is in trial balance, to what is in trial balance. And number 2, treat the accrual as current liabilities. In the balance sheets. In the balance sheet. In the balance sheet. So hapa in the balance sheet. In the balance sheet. That's what we need to know. That is what you need to know. Now, let us do an example. Let us do an example. Just a small example. See, ka example tu kadogo. Example tu kadogo ka accruals. Just tu kadogo before tufanye swali. Unajua the more tunateremka, the more tutakutana na maswali. So let us see what they are talking about is true. Just an example. Let's look a small example. A small example. Let's do a small example. And we say, for example, given the trial balance, as follows. So tunaweka tu moja, let us assume electricity of 500. Then additional information. Additional information. And we say electricity owing is 100. Electricity owing is 100. Is 100. Now, this is what it means. Solution. So we are supposed to prepare determine the expense to be transferred to P&L, to be transferred to P&L and any other adjustment. Let us see the first adjustment. Tumesema that when we talk about an accrual kumaanisha we have not paid up to standard. Now, remember, what is in the income statement is what is paid. This is what we paid. But remember, we have tuko na deni ya 100. Ni kumaanisha tuko na deni ya 100. Now, using the accrual concept. We are supposed to record what's incurred for the period to match against the revenue. So what's incurred? Now, what was paid is 500. What was paid was 500. Lakini, additional information inasema tuko deni ya 100. Kumaanisha how much have we incurred? So, what we have paid is 500. Lakini, tuko na deni ya 100. Inamaanisha how much have we incurred in total? What do you think, Redisha? Naona wewe yako ndio huko. Wengine waje join.
400.
Ona, ulikuwa unalipa stima. Ukalipa stima 500, ukabaki na deni yao ya 100. Ni kumaanisha ulikuwa umetumia stima ya pesa ngapi?
400.
Acha nirudia ya mwisho. Ulikuwa na deni ya stima ya 500. Sorry, umelipa stima 500. Sivyo? na ukabaki na deni ya 100, ni kumaanisha ulikuwa umetumia stima pesa ngapi hiyo mwezi?
Ya 500.
100. Ona, this is what I mean. Ulikuwa unalipa stima ukalipa 500, lakini ukabaki na deni yao ya 100. Ni kumaanisha hiyo mwezi ulikuwa umetumia stima ya pesa ngapi? Ulikuwa na deni yao ya pesa ngapi? Ukalipa 500 ukabaki na deni yao ya 100. Ni kumaanisha stima ulikuwa umetumia pesa ngapi?
600.
Yes, hiyo ndio namaanisha. So haukulipa hukulipa the full amount. You are supposed to pay 600 but ukalipa 500. Sasa nilikuwa nasema what is in the trial balance is what is paid. So ukwe very keen. What is in the trial balance? It is what is paid. Or in the trial balance, only amount paid is recorded and not also in card. So the amount in the trial balance is what
Umefanya kila kitu.
nani wanaingia hivyo?
Sisi tumebaki gani?
Nani anaingia hivyo bwana? Hata una mute. Who is that? Aya. So mimi nasema what is in the trial balance is what was paid. Now what was paid day hapa 500. Lakini when we're talking about an owing or an accrual, it means we have not paid the full amount. So tulibaki na deni yao ya 100. So we need to record what was in card. Now what was in card is, so our requisite expense itakuwa ni 500 plus hiyo deni ya 100. So what would be in the income statement? What would be recorded in the income statement as expense is 600. So as expense in P and L. That is what would be recorded in the income statement. Lakini remember hii 100 hatujalipa. Remember this 100 hatujalipa. So meaning the 100 will be treated as current liability. Baka wakati italipwa. Once we pay that 100, itatoka. So this 100 kwa sababu ijalipwa will be treated as current liability. As accrue liability. Tuko sawa? Umeelewa
Yes.
hapo? Aya, so that's all about the accruals and prepayments. So accruals and prepayments tumemaliza hivyo. Accruals and prepayments tumemaliza hivyo for expenses. Now let's go to accruals and prepayments for income. So tuanze na number 1. Let's start with the prepayments. Prepayments for income. So tumemaliza na expense. Now let's talk about the incomes. So we start with the first one, prepayment income. Now, what does it mean? It is the opposite. Now we are receiving. No. So this is the opposite. Now we are the one who is receiving the income. So kuna mtu akona deni yetu mahali. So someone akona deni yetu ya pesa ngapi? Let's assume someone akona deni yetu ya 200, 200 Kenya shillings. So kuna mtu akona deni yetu ya 200. Lakini jamaa bado tulipe 200, atulipe 400. Atulipe 400. So inamaanishaje? Ametulipa more than what we expected. Is that all correct?
Yes.
So kumaanisha tulikuwa deni yake pesa ngapi?
200.
Ya 200. Now the 200 will be treated as an income. This one, acha tuweke 500 ndio is to confuse. So kuna jamaa anafaa kutulipa deni yetu ya 200, akatulipa 500. Kumaanisha sisi tunafaa kumrudishia pesa ngapi? 300. Is that all correct? Yes, 300. Now hiyo 300 kwetu ni deni kwake, sivyo? Kwa sababu ametulipa in excess. Ni either turudishe hapa tukoje next month ifike iende to the next period. Si ni kweli?
Yeah.
So kumaanisha hiyo 300 it is not for the period. For the one for the period ni 200. That's what we shall be recorded in the income statement. That one is the amount for the period. Tuko sawa, you may receive the 200 for the period. But that extra 300 is for the next period. And therefore it will be treated as what? As current liability kwa sababu ni deni. Sisi tuko na deni yao. We are going to treat it as current liability. Tuko sawa?
Sawa.
So tunaandika chini occurs when we receive occurs when we receive occurs when we receive
Nimeingia online. Pata hapa.
Hukunipata chini.
more than what we earned. So this occurs where in a situation where we receive more than what we earned. It occurs when we receive more than what we earned. It occurs when we receive more than what we earned. So it occurs when we receive more than what we earned. That's what we need to know. More than what we earned. Then we can say we take into consideration, we take into consideration what was earned, what was earned, and not what has been received. And not what has been received. And then this word, we take into consideration what was earned and not what was received. Now, we are supposed to be paid 200. Let me repeat again. We are supposed to be paid 200. So this is what was earned. This is what was earned. But we were paid. But that person wakati anatulipa, that person paid 500. Now, we take into consideration what was earned. What was earned for that period? $300. That 300 is not what we earned, and therefore we shall not consider it for the purpose of income statement. But for the purpose of balance sheet, that 300 will be treated as current liability. I think that one is clear. That one is clear. Tutafanya example. Now, before we do an example, treatment. So usipojua kufanya hizi treatment, that's on you now. Utakuramba. For prepaid income, we less the prepayment income. We less the prepayment income. The prepayment income. So for prepaid income, we less the prepayment income, which will be treated as other income, which will be treated as incomes. Number two, the prepayment amount will be treated. The prepayment amount will be treated as what? The prepayment amount will be treated as current liability. So those two items are very, very important. So those two items are very, very, very important. Aya, tumemaliza na hiyo example. Let's do an example for prepayment income. Let us do an example for prepayment income. Aya. Tutafanyia hapa. So given the following trial balance, for example, given the following trial balance, So given the following to a balance, then you have the, for example, investment income. Investment income ya ngapi? Sema 1,000. So you have an investment income of 1,000. Then additional information. Additional information. Additional information. We say investment income is prepaid by 200. So required give all the adjustment. Give all the adjustment required. So what are those adjustments that are required? What are those adjustments that are required? Yes. So solution. So investment income will be equal to the correct investment income. Itakuwa ni 1,000. Now remember, we have paid excess. So we have paid excess. Now we have paid excess of 1,000. So we have paid excess of 1,000. So kumaanisha tumelipa extra by 200. So tumelipa extra by 200. So this 200 is not for this period, it's for the next period. So we need to remove it because it's excess. We're back in 800 as income. As income in P&L. Then the 200 will be treated as current liability. Be treated as current liability. Umeona vile tumefanya? So tunasema investment income is prepaid by 200, kumaanisha sisi tulilipa an extra. So we were supposed to receive some amount, but when I tulipa an extra 200. So kumaanisha aliongeza the amount. So I tulipa an extra 200. So I tulipa an extra 200. So what was paid is what is in the trial balance. So for prepayments, what was paid is what for prepayments for income, what we received, sorry. So for prepayments for income, what we received is what is in the income statement. So we received 1,000, but this 1,000 has an extra 200 in it. And therefore we need to raise that 200 because that 200 is for the next period. So we just put what was earned. So remember, you're not interested in what was paid. You're not interested in what was paid. We are interested with what was earned. So what was earned is 1,000 minus 200 because the 200 is for the next period. So we need to remove it so that it become our expense. Then that 200, because we receive it more than what we expected, ni kumaanisha tuko na deni hao watu wametulipa more. So kumaanisha tuko kama tuko deni yao ya 200 kwa sababu tulipa more amount. So we shall treat it as current liability until this amount is used in the next period. Haya, tumemaliza na hiyo, so we can go now to owing for income. Let's go to the next one, accruals for income, or we call them owings. Number 2, so we are in income. So we do owings for the income. Then we shall talk about depreciation and allowance kidogo. And then sasa tufanye swali from a past paper. So nikimaliza adjustment, I will end the class, then you rejoin again. But before we speak hapo, let's talk about accruals, income. Now, where does it comes? Now, we are supposed to receive 200. But huyo jamaa akatutumia 100. Umeona? We were supposed to receive 200. Lakini huyo jamaa baada atutumie 200 akatumia 100. So kumaanisha alitutumia less na 100. So in that situation is where we have what we call the accruals income. Receiving amount less than what we earned. So receiving an amount less than what we earned. So occurs when we receive amount less than what we earned. So we say occurs when we receive an amount less than what we earned. 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 Then we say treatment. Treatment number one, always must be added back. Always must be added back. Must be added back and treated as expense and treated as income. So that owing must be added back for income. So for income, it must be added back. So it must be added back, and then number two, it will be treated. It will be treated as current assets. The balance sheet. It must be treated as current assets in the balance sheet. It must be treated as current assets in the balance sheet. So it must be treated as current assets in our balance sheet. So it must be treated as current assets in balance sheet. Let us do an example illustration. Let us do an illustration. Let us do an illustration. So accrued income illustration. Given the following trial balance, given the following trial balance. So investment income, I go with the investment income. Let's say investment income is 1,000. Then additional information. Additional information. The additional information nasema hivi. I can say accrued income, accrued investment income is 200. Now, required, give adjustments, You're supposed to give the adjustment, give adjustments required. Solution. Give the adjustment required. What are the adjustments required? Now remember, when we talk about owings, we have received less. So kumaanisha, we were supposed to receive how much? We are supposed to receive how much? How much are we supposed to receive? Now remember, this is what is paid. This is what was received. Remember, this is what is received. So the item, when we talk about accruals, what is in the trial balance is what is received. So we talk about the accrual income. What is in the trial balance is what was received. So we received 200, but we did not receive 1,200. So remember, we record what was earned and not what was received. So what we received, so we talk about the accrual income. What is in a trial balance is what we received. Is what we received, but we are supposed to record what was earned. Now, how much was earned? Now, our investment income is supposed to be the 1,000 that was received plus the deni hatuja received. So remember tukuna deni, wakuna deni yetu ya 200. So they were supposed to pay us 1,200. Walikuwa supposed kutulipa 1,200. Lakini wao wakatulipa 1,000. Kumaanisha walibaki na deni ya ngapi? 200. We call them owings. Those are the owings or the accruals on investment. So they were supposed to pay us 1,200. They pay us 1,000. So 1,000, we talk about the accruals. What is the trial balance is what was received, this one. But we are supposed to record what was earned, the accrual concept. So we are supposed to add back the 200. So that the total investment income is 1,200. Iko sawa? I think iko sawa. Then what other adjustment do we need? The other adjustment is that the 200 will be treated as, so this one hatuja receive, so it will be treated as current assets. That is all about the accruals and prepayments. Any question? That's all about accruals and prepayments. Any question before I go to the next item? So that's all about the accruals and prepayments. That is all about the accruals and prepayments. So if there is no any question, I can comfortably go to the next adjustment. So adjustment number one was accruals and prepayments for expenses and income. Na tumeshamaliza. The second one is provincial for doubtful debt. So provincial for doubtful debt, that's the second adjustment. So here tunarudia tu what we did in our previous class. Ile tulifanya ya provincial for bad debts. So let's go to adjustment number two. Adjustment number two, provincial for bad debts. So adjustment number two. Adjustment number two. So leo nataka tumalize preparation of final account of sole trader. So leo lazima tumalize. Leo naona tunaenda mpaka saa moja. Leo naona tukienda hadi saa moja. But tutakuwa na break hapo katikati. So we need to finish this adjustments kwa sababu ni mingi. Lakini si mingi. Ni kidogo sana. So let's go to provision for doubtful debt. So the second adjustment number two, provision for doubtful debt. The reason why nafanya hivi, I'm doing it with a purpose. So the reason why nafanya hivi ni kwa sababu I want to make your work easier in exam. I just want to make your work easier in exam. So also called allowance for irrecoverable bad debt. Now this one uses prudence concept. So the first adjustment that we did, the first one about accruals and prepayments. Now accruals and prepayments uses the accrual concept. So that one uses the accrual concept where we need to match revenue we need to match the expense in card with the revenue for the period. And also we need to match the revenue in card with the expense for the period. So this one does not use the accrual concept. This one uses the prudence concept. Now, what does the prudence concept state? This is what the prudence concept states. It says that it states that we should always that we should always anticipate losses. Anticipate losses. So it states that we should always anticipate losses in the future. In the future. So it states that we should always anticipate losses in the future and not anticipate profits. And not anticipate profits. So that's what they try to say. i.e., you can just say it tries to explain that expense. It tries to explain that expense that is not likely to be paid. That is not likely to be paid. So those are the bad debts. In short, we'll get the bad debt. So we should not anticipate to get the profit from the debts, but we should anticipate losses. We should anticipate losses. Now, NB, this now is an unpaid and very important. If bad debt is already, so you mark this one, is already into your balance. Into your balance, it has already been adjusted. It has already been adjusted. So it's already been adjusted. With the debtors account. I.e., it has already been subtracted. So ukiona any information in the trial balance about the bad debt, we don't have information in the trial balance about the bad debt, where you are that information has already been adjusted. You ignore it. As in additional information. Is in the additional information. It has not been adjusted. It has not been adjusted. And it must be it must be subtracted from the debtors account. is very, very important. Nataka uangalie hiyo. So those two items. Number one, if the bad debt is in the additional information, then you need to do adjustment for that one. But if the bad debt is in the trial balance, ignore it. Just treat it as an expense direct. Provision for bad debt, provision for bad debt. Now, for provision for bad debt, for provision for bad debt. Naweza kumbuka atuambie how do we treat the provision for bad debt? Naweza kumbuka we had talked about it in our previous class. Who can remind us? Nani anaweza kumbuka? Yes. Now, for provision for bad debt, we need to consider the provision for the year and for the previous year. So we need to consider if it's an increase or a decrease. For provision, we talked about either an increase or a decrease. Yeah. It is calculated from net debtors account. So tukisema the word net debtors account kumaanisha we need to deduct the bad debt. So we need to deduct the bad debt, i.e. deduct bad debts from debtors account to get net debtors account. That's the number one. So for provision for bad debt, we need to calculate from the net debt account. Number two, provision in the trial balance. Provision in trial balance is the provision for the previous period. Is the provision for last period. So any provision for bad debt in the balance, ujue hiyo provision ya previous year, sio ya hii mwaka. Ukienda to any provision for bad debt in the trial balance, just know that that provision is for the previous year. Haya, mimi nimewaambia, mseme sikuwaambia. Haya, next. Now, if provision for doubtful debt is in trial balance and note in additional information, not additional information, haya nimewaambia pia hiyo, mseme sikuwaambia. If provincial for doubtful debt is in trial balance and not in the additional information, ignore that amount. Ignore that amount because it is not of use to us. It's not of use to us. But let me give you another information. If provision for doubtful debt is not in trial balance, but in additional information, so if the provision for doubtful debt is not in the trial balance, but it is in additional information, treat it as an expense. Treat it as an expense. And then to the full stop, the same amount the same amount will be subtracted from debtors account. From debtors account. I hope I'm very clear. Now, very important. Now, if the provincial for doubtful debt is not in the trial balance, but equal additional information, you treat that amount as an expense. Make sure you treat that amount as an expense. Then the same amount will be subtracted from the debtors account. So the same amount will be subtracted from the debtors account. Be very keen for that one. You'll be very keen with that one. Now, ya mwisho, if provision for doubtful debt is intrabalance and also in additional information and also in additional information, determine whether we have an increase or a decrease. Determine if we have an increase or a decrease. Now, an increase is an expense. Number B, a decrease is an income. Here, what we in our previous class. Is that correct, Redisha? We talked about it in our previous class for debtors. Yes. Yes, Redisha. Did you talk about it? Am I at the left? Okay, the left. Mwikali, you talked about it in our previous class when you talk about that provision can either be an increase or a decrease.
I was not around.
Au kupitia hata video kwa Telegram?
Bado napitia
Yeah.
leo usiku.
Mmoja umepitia Kitawaramba. Exam iko kwa it is around the corner. So very.
Yes, we talked about it.
Yes, make sure you grab these aspects kwa sababu zitakuja kwa exam. Isije kikawaramba bwana. Okay. So when you have provincial for in both trial balance and also in additional information, then what you should do, you should determine whether it's an increase or a decrease. So in the case where you have a decrease, then it shall be an income. But in the case where you have an increase, you shall treat it as an expense. Now let's talk about number 3. So this one is over. Provincial for doubtful debt, that one is over. That's about provincial for depreciation. Provincial for depreciation. Provincial for depreciation. Provincial for depreciation. So write that one down. So I'm giving you 1 minute, Naruto Sai.
Teacher nikaa umemute hatukusikii.
Oh. Na sasa hivi
Uko sawa lakini from the start hatujasikia anything, ulikuwa mute.
haya. So I was saying that provision for depreciation, when you talk about the provision for depreciation, we mean other people call them the accumulated depreciation. So the word provision for depreciation is the same as accumulated depreciation. This is also called the accumulated depreciation. So the word provision for depreciation is just another name of accumulated depreciation. Now, when given the trade balance below, so you have the trade balance, you have the debit side and the credit side. So we have the motor vehicle, and it is recorded on cost. Make the word cost in bracket, meaning the motor vehicle is recorded on cost. Then you have the provision for depreciation of 600. You are required to calculate the depreciation charge for the year and the net book value. So you're supposed to calculate the depreciation charge and the net book value, given that the rate of depreciation is 10% on straight-line basis. Now, straight-line basis means on cost. Straight-line basis means on cost. Now our cost for motor vehicle is 1,000. So 10% times 1,000 to give us our depreciation. Itakuja ngapi? 100. So that is the depreciation for the year. To be transferred as expense in P&L. To be transferred as we say, so the 100 to be transferred to P&L as expense. Number two, the net book value. Net book value is the value in the balance sheet. Is the value in the balance sheet. So kwa balance sheet tunachukua cost, which is 1,000. Then remember to less the accumulated depreciation of 600. And also remember to less the depreciation for the year of 100. So kumaanisha kwa balance sheet tutarecord how much as motor vehicle. The new value for motor vehicle
300.
Itakuwa 300. Yes, correct. Tuko sawa hadi hapo? Are we okay? Tuko fit hadi hapo?
Uko sawa.
Haya, I think tuko sawa. Now, let us assume now, calculate the depreciation. So let us change this one. Calculate the depreciation charge for the year and the net book value, given that the depreciation is on. Now let us change this amount. Tuweke hapa the reducing balance. So to change here hapa to reducing balance. Let us change this one to reducing balance. Now reducing balance, itaendaje? So we need to tutoe hii. So tufanya reducing balance. Now for reducing balance, itakuwa for reducing balance, less accumulated cost. So for reducing balance, less the accumulated cost. So that's the accumulated depreciation from cost. From cost. So itakuwaje? So depreciation charge for the year. Depreciation charge for the year. Itakuwa 10% times. Now you're supposed to less to the 1,000. The 600. So how much would that be? Itakuwa 10% of 400. Itakuwa ngapi? 40. So to be transferred as an expense. As an expense in P&L. Aya, net book value for motor vehicle. Motor vehicle. Itakuwa ni 1,000 minus the 600 minus 40. Itakuwa hivyo? Itakuwa hivyo ama sivyo? Iko baki hapa 1,000 minus 600 ni ngapi? 400. Actually, this is supposed to be 400. Actually, the correct amount is supposed to be 400. If we erase hapa, tutoe 40 sasa. Tabaki ngapi? 360. Tuko sawa? Tuko sawa?
Iko sawa.
That one is all about it. That one is all about it. Now, sometimes wanaweza kutwist. Sometimes wanaweza kutwist. But tutaangalia kwa exam, tutawaambia in an exam wakati wana kutwist. Let's go to the next provincial, number 3. Number 3 and number 4. Supposed to be number 4, sivyo? The next one, number 4, ni number 1 ilikuwa ni ya cruise, number 2 tukaenda number 2 tukaenda mambo na nini? This is number 3. Number 2 tukaenda bad debts, number 3 tukaenda depreciation. So number 4, let's talk about drawings. Drawings. So it can be for cash or goods. So it's either you take cash from the business for personal use, or you take the goods from the business for personal use. So when we talk about drawings, it can either relate to stock drawings or cash drawings. So i.e. cash drawings or stock in goods drawings. Let's start with the first one, cash drawings. Let's start with the cash. Let's start with the cash drawings. For cash drawings, this is the adjustment treatment. We'll talk about the treatment. The treatment in mbili. So treatment is 2. Number 1, for cash drawings, subtract the cash account. Before tufanye hapo, let me show you. Let me just do this to make our work easier. So we say when drawings is in additional information. Allah. So when the drawings is in additional information. The following treatment must be made. The following treatments must be made. So this is where it is in the additional information. The following treatment must be made. So number one, for stock, we shall have two adjustments. So number one, for stock. Let us see when we take inventory or stock for personal use. Number one, we must reduce the purchases. We must reduce the purchases. With the amount of drawings. With the amount of stock drawing. Note that one, please. For stock, number one, the first treatment is that we must reduce the purchases account with the amount of drawings. Number two, subtract the drawings in the capital account. Subtract drawings in capital account. In capital account. I think tuko sawa, hiyo tumeelewana. So ukiona two drawings, when you see drawings for stock, remember you must reduce the amount of drawings, one from the purchase account, and the other one you must also reduce it from the capital account. That is for stock. Let's go for cash. Number B, for cash. So we also we are also having two adjustments for cash. Two adjustments for cash. Number one, subtract the cash account. Subtract cash account. Subtract cash account. And number two, subtract the capital account. Subtract. To subtract the drawings. Subtract the drawings from cash account. From cash account. And those subtract drawings from, now subtract drawings from capital account still. Capital account. Now this is when the information is in the additional information. Now what if the information is in the trial balance? Now what if you find the information in the trial balance? What do we do when you find the information in the trial balance? Now let us see when the information is in trial balance. When the information is in trial balance. So when the information is in trial balance alone, yeah. Remember this class is going up to 7. So mkumbuke kazi tena mpaka saa 1 usiku. Haya. Na sasa ni saa ngapi? What is the time?
4:11.
Na inaenda mpaka saa 1. So we have a lot of time. Haya. When information is into balance, this is how you do it. So remember we are still at drawings. This means adjustment has been made. So this means adjustment has been made. Reduce only capital account. Reduce only capital account. Reduce only capital account. Reduce only capital account. That one marks the end of adjustment class. That one marks the end of adjustment account. Any question? So I want you to rest for 30 minutes. 30 minutes is okay. Tupatane tena. Tufanye preparation of accounts. So we are supposed to start a new topic so that we complete what we lost yesterday and the other day. Preparation of final account. Final account of sole trader. So niwapatie muda kiasi gani mpumzike? 1 hour is enough for 30 minutes. So that we do, so that you adjust the adjustments, so that tukuje tufanye maswali 2 ama 3. So preparation of final account of the sole trader. So that one is the end of that topic. So topic tumemaliza hivyo. Elish, 30 minutes or 1 hour for kupumzika?
1 hour.
So 1 hour. What is the time? The time is 4:13. We start from 5 sharp. We meet from 5 sharp. We continue 5 sharp. And when you come back, make sure you have your past paper with you. So kindly make sure you can past paper. We are going to do the question for last sitting, December 2024. So make sure unaingia ukiwa na past paper. So we meet at from 5 sharp. 5 sharp. We meet from 5 sharp.